Joining in to discuss that and lots more is Balu Ramachandran. He's a senior VP at Cleartrip with us on the show. Good morning and great to have you on board. To begin with, I want to understand your view on the backdrop of this declining consumption and investment, the rise in crude oil prices impacting airfares. How has the tourism industry been impacted?
Sure. I think you did speak about the numbers that we have seen for the past few months. I think what's also going to be interesting is in terms of how all of this pans out for the next few months. As we've seen, the tensions have impacted crude pricing by around 5%. A lot of the costs for the Indian airlines tend to be dollar denominated, as well as crude oil tends to be a big factor of their pricing. We really have to understand how all of these factors will play in. And what we have seen in the last many months is that the overall domestic passenger demand, especially from an aviation standpoint, is extremely susceptible to the average pricing that the airlines hold. So while the input cost for the airlines would tend to go up, that would naturally, we would expect that the pricing for air travel in the domestic context will go up as well, and that should impact negatively the overall demand in domestic air traffic. That said, I think we have two other large factors that could be interesting layers on top of this. One is there seems to be a revival of interest in jet airways and a couple of bids that's coming in. There is obviously the divestment of Air India as well. And how will these factors add to the competitiveness of Indian aviation and impact pricing? I think that's to be seen as well. But in summary, I think if pricing holds at the current levels or increases because of high input costs, we would expect to see that the demand domestically at least will come down.
Also wanted to understand, whether or not there's been just about flat growth for tourism when it comes to inbound traffic. What kind of occupancy levels are hotels looking at right now, and what really is the outlook going forward?
So I think despite the inbound tourism being at whatever 3% levels for this year, I would expect that should be at approximately the similar levels next year as well, unless there are large geopolitical issues that come in and impact us. But a lot of the story on demand for hotels is also because of the rise of the domestic traveler. We have seen the occupancy rates increase significantly over the last few years from mid-50s to the early 60s. Now we are hovering at about 66%. The outlook is that the occupancies will go up to an average of 68 to 70% over the next 2-3 years. And we've also got a large number of micro markets in India where the occupancy rates are already hitting 70 and breaching 70. So I think in summary, as long as the economic factors which drive domestic consumption are holding valid, we should see that the occupancy rates for India will be strong, and that should result in the overall demand. The occupancy rates will be strong on the back of strong domestic demand.
How has passenger traffic growth been in light of the Boeing crisis as well? Jet shut down, of course. Now we're seeing a rise in crude. So what does that indicate for airfares?
So if you keep aside the revival of jet airways and the divestment of Air India, which should be increasing the competitive intensity for domestic aviation, if you keep aside that factor, I think airfares should see an increase. We've seen an approximate average increase of about 6 to 8% in the financial year 2020 so far, and I would expect the next year to be witnessing at least a 5 to 8% increase in airfares as well. And the increase in airfares for the last year has kept demand kind of muted for India domestic, and we would expect that it tends to be muted as well for the next year if fares hold between 5 to 8% increase.
It's positioned as the world's 6th largest travel and tourism economy. We've got the sector contributing nearly $230+ billion. What kind of growth are you foreseeing in light of the kind of steps that have been taken by the government to bolster tourism, the e-visas, etc.?
So I think the issues that we speak about and muted demand are possibly, very, very short-term factors. The outlook for India for the mid to long term continues to be very, very strong. Domestic aviation will continue to increase at between 15 to 18% in a 5-year kind of time frame. So I am very, very bullish and positive about the outlook for India. Yes, there are headwinds that kind of impact us in the near term, but overall for the next 5-8 year forecast, both from a domestic aviation standpoint, from a domestic hotel standpoint, I think the India market will see the high double-digit growth that's expected.
we've got the onslaught of the new decade. We've been talking about, the kind of travel trends. Do you think that it's now going to become more focused towards sustainability, being more technologically advanced, more personalized and enhanced services? What kind of trends are you foreseeing?
I think the biggest trend is the use of mobile, right? And everyone has spoken about it for the last many years. We have a situation where upwards of 70% of overall searches today that happen for flights or hotels in India happen on the mobile. And with increasing travel propensity, you would tend to see a lot more in-destination activities, etc., to pick up as well. And that's really, I think, one large factor. The second factor that is here to stay is that most people, the millennials, the young population, really want to travel, and travel is a core part of how they want to live, right? So the domestic demand is going to be very, very strong. And as we see, the mature markets have evolved from a low travel propensity to high travel propensity. There are factors like adventure tourism, there are factors like sustainability, etc., that come to play as well, and we would expect to see some of that happening in India as well.
Have you seen any sort of a major drop in the hotel occupancy rates at a time when there has been travel advisories due to the CAA protests? Has that in any way impacted sentiment significantly?
I haven't heard such reports emerging yet. I think the peak Christmas New Year season is just out, and at least anecdotally from whatever we hear, the occupancy rates have been fairly strong. And I think a lot of it is also because of that emerging domestic demand as well. And I don't think that there were massive issues in terms of occupancy rates in any of the hotels for the Christmas New Year period.
Clocking a gross booking value of about $1.5 billion annually. How much of it is from India operations and how much from the Middle East? And now with these tensions escalating in, the Middle Eastern region, would you say that the forecast for the near term at least is looking a little bleak?
So from a Cleartrip standpoint, I think 50% of our revenues are India, 50% is coming from non-India. The Middle East ecosystem will see a strong resurgence. Obviously, there could be short-term factors on the basis of the crisis that's happening there. But we've also seen that some of it is fairly contained. Some of the early reports that are coming out, both from the US as well as from Iran, talk about everyone trying to put restraint as well. So we are positive. We are positive about the short-term outcome as well. And we are definitely extremely bullish about the midterm view around these markets.
Let you go on that note. Thanks much for taking time out and joining in, sharing with us the outlook on, what the impact has been on the tourism industry, airfares, as well as what the kind of travel trends are that we'll be looking forward to.